Hey there folks, welcome to Wall Street Mojo's investment banking tutorial, and today's topic is sell side versus buy side. Now, sell side versus buy side is a very general topic, alright? Now, sell side people or sell side firms are the ones which are trying to pitch some idea to the buy side. So typically in an investment banking setup, if you see JP Morgan or Citibank or Goldman Sachs or Morgan Stanley, these are the kind of firms which would be pushing their ideas to the hedge fund managers or a portfolio manager of an education fund or a pension fund. So in this kind of setup, all of the people who are buying the idea or the firms who are buying the idea are the buy side firms, and the firms which are selling the idea are the sell side firms. So if you look at the example here, so what is it? So sell side is associated with the entities which facilitate the decision making of the buy side entities, and the buy side is associated with the entities that are involved in the making of investments. So buy side are the ones which are putting in the money. As you can understand it this way, the buy side are the ones who are putting in the buck, who have got deep pockets, who are deep pocketed investors, who are sitting on the sunny side of the table, and sell side people are the poor ones who are just pitching their idea to the buy side, who are just pushing the stocks, who are just pushing their research reports to the people who are buying them, right? So these are the poor chap who work in the investment banks, day in and day out. They do all the research, and they come up with the reports. They make them look jazzy, so that people buy them, and as a result, they just get bought. So these are the overall differences. It's with a high level perspective. All right, now let us also look at the institutions involved. So in a sell side, typically we've got investment banking, then commercial banks, stockbrokers, and then the market makers. So basically all the entities who wants to just push their products, who wants someone to buy something. All right, and on the other hand, in the buy side, the entities involved are hedge funds, like I've already mentioned, asset managers, institutional investors, and retail investing. So these are the folks who are putting in the buck, who will be, investing in the idea, who will be making, investing decisions, so to speak. All right. Now let us look also the goals. Let us look the goals of all the of the buy side and the sell side. So sell side firms are firms looking to pitch and sell assets or opportunities, while on the other hand, the buy side firms are the firms with capital. They have deep pockets and looking to buy assets or opportunities. So sell side are giving the opportunities, and buy side firms are, grabbing the opportunities with their money. Now the structure. Well, on the sell side, we've got analyst, associate, vice president, and managing director from a hierarchical point of view. And on the buy side, we've got portfolio manager, then researcher, and marketing person. So it is a little leaner in the buy side as compared to the sell side. Now the lifestyle. As you can see here on the screen, the sell side guys are the ones who are, burning the midnight oil. So working more hours. So, typically in an investment banking setup, someone, a person who would be putting in a lot of time and research, and they would be putting up all this in a report so that they can sell it to the buy side people. While on the other hand, if you look at the buy side, their life is a bit easier. They just have to ascertain where the money has to go or where the investment has to be made. So they just have to be smart enough to understand the investments. Okay, so their life is easy. And let's look at the work of the analysts. So in a sell side, they give buy sell recommendations, and the reports are available to the public domain, to the public, and they can access it. And depending upon what is given in the report, they can make a decision to invest or not to invest. All right. While on the other hand, for buy side analysts, they use the report, like I've said, created by the sell side analysts, and carry out their own analysis further. So if they want to analyze it further, they can very well go ahead and do that. But then they also use the material which is prepared by sell side folks. And lastly, the compensation. So the sell side folks who are putting in more efforts, who are working really hard, who are making things together, they are, got paid less. And I know you're thinking that, that's not fair, but that's a fair game in the investment banking setup. While on the other hand, if you look at the buy side folks, they are making more money. And that's because of their smartness, to understand where the money needs to go, that needs a certain acumen, and the buy side folks have that. So that's why they are paid more. Anyways, I hope you've had fun, and bye for now.